Accounting and Technology, Illustration 1. Transactions carried out in ERP, financial reporting weaknesses were observed. No documented process, changes not valid, not properly authorized, roles and responsibilities not clearly defined or documented. Individuals in these roles not have appropriate accounting knowledge. Treatments not documented or approved by management. General policies not established and documented. User profiles not monitored. Accounting treatment is not specified or non-routine for non-routine event. Data to record non-routine event is not captured. Accounting policies to non-routine event is not performed. Non-routine events not accurately processed. No independent review of accounting policies to non-routine event. No basis for significant estimates and judgments. No analysis prepared accurately. Routine and non-routine events not identify analysis. No reconciliation for significant accounts. All intercompany transactions are not identified. Suspense account not identified. Trial balance not generated from general ledger. Trial balance account not grouped. No restrictions to access consolidated software. Related party events transactions are not identified. No procedures to ensure all postings have occurred. Directly recorded entries in financial statements are not valid. Provide illustrative steps for financial closing and reporting. Solution. Illustrative steps for financial closing and reporting. Verify identification updating financial reporting requirements. Review process aligns financial reporting policies. Use ERP to track and validate changes using system logs and audit trail. Verify authorized by designated individuals. Review change approvals documentation, ensure authorization. Validate roles and responsibilities clearly defined, reviewing users access matrix configurations. Assess qualifications and training records of individuals. Validate individuals have validate individuals to have understanding of entities operations and accounting knowledge. Validate accounting treatment for significant events. Documented and approved. Review documentation, accounting treatment decisions and approvals. Review appropriate individuals have access. Review KYC validation controls in place. Validate accounting treatment for each non-routine event, transaction, account balance. Use ERP system audit trail. Validate all postings. Review system controls for preventing backdating. Illustration 2. Company XYZ Limited wants your advice on ERP system for inventory management. Integrate ICOFR controls. ICOFR means internal control over financial reporting controls in ERP system. Need your guidance. Steps to be followed if company cannot afford a ERP system. ERP system for inventory management. Solution. ERP system for inventory management. Steps to configure and enable ERP. First part of each point is input given to ERP system, and second point is how ERP process that input to produce desired output. First point. Bill of materials with ERP system. Within ERP system, system calculate total cost and costs of each component. Implement purchase order controls within ERP. Includes verifying purchase, obtaining approvals, quantities, costs of materials. Costing methods within ERP system. Apply chosen costing method consistently. Labor costs within ERP system. Ensure recording hours worked by production workers, labor costs. Define overhead absorption rate. Rate based on normal level of production. ERP apply overhead rate consistently. Integrate ERP with general ledger and expense allocation. Ensure expense reflected in cost of inventory. Reconciliation between inventory records within ERP and physical inventory counts. Identify discrepancies. Utilize reporting analytics capabilities of ERP system. Integration of ICOFR in ERP system. Management integrate internal control over financial reporting controls in ERP system using the following points: to ensure segregation of duties within inventory management process. Segregation ensures no employee has ability to manipulate. Next point. Incorporated by implementing access controls, prevents unauthorized access. Includes workflow approval process for inventory transactions. Ensure purchase authorized by appropriate individuals before processed. Company utilizes barcode or radio frequency identification technology, reduces manual data entry errors. Next point. Physical inventory, periodic physical inventory counts, system reconcile and highlight discrepancies for investigation and adjustment. Technology driven data analytics tools integrated into ERP help in detecting potential control weakness or irregularities. ERP system provide management dashboards, customized reports, enabling management to assess the effectiveness of ICOFR controls. Next, inventory management in the absence of efficient ERP system. Alternative procedures available are: export the data into spreadsheet, organize exported data and label each column, use formulas to calculate material costs, multiply individual or sum up multiple components and multiply them with costs, use formulas for labor costs, determine overhead absorption rate based on normal level of production per month, non-production expenses allocate using appropriate method, sum up material cost, labor cost, overhead cost and allocated non-production to obtain the total inventory cost. Physical inventory counts, compare costs, identify discrepancies, investigate causes. Create reports in spreadsheets. Illustration 3. Company Z is engaged in the business of importing oilseeds for further processing as well as trading purpose, and it enters into the following contracts on 1st October. Particulars: Contract 1, Contract 2, Contract 3. First, nature. Contract 1, imports from foreign supplier. Contract 2, purchase in domestic from domestic supplier. Contract 3, contract to sell on commodity exchange. Next, quantity and rate. Contract 1, quantity 100 MT, rate is USD $400, 400 USD per MT. Delivery 31st March 20x2. Contract 2, quantity 50 MT, rate is 30,000 per MT rupees. Delivery on 31/1/20x2. Contract 3, quantity is 50 MT, rate is USD 50 per MT, maturing on 15/1x2. Net settlement, yes in all cases. Net settlement for similar contracts. Contract 1, instances of net settlement 30% of the value of total import. For contract 2, it is instances constitute 1% of the total domestic purchase value, remaining settled by delivery. For contract 3, net settled enters these types of contracts to hedge risk on domestic purchase. Determine contracts entered are derivatives as per Ind AS 109 or executory contracts. Advise whether nature of contracts determined through use of technology. Solution: yes. Yes, extract data from accounting package. Connecting spreadsheet with database through ODBC. In case data extracted from accounting package I'm repeating this again. In case data extracted from accounting package, the following steps to be followed. Identify data fields like quantities, rates. Export data from accounting package. Open exported data in Excel. Remove unnecessary columns and rows. Data aligned for further analysis. Identify rules or criteria for categorizing contracts as derivative or executory as per Ind AS 109. Establish conditions to evaluate contract data. Apply defined rules or criteria. Use functions if and or VLOOKUP to determine nature of each contract. Categorize contracts based on analysis results. Assign to indicate contract is a derivative or an executory contract. Illustration 4. Customer can get connection from entity and modem from another vendor. Various plans where entity provides either broadband services or voice call services or both. Identify performance obligation is distinct by using an automated process. Solution. Steps can be taken as follows. First point, analyze clauses on contract. Each clause is codified. Assign Boolean values or tag. 0 to represent no and 1 to represent yes. Define criteria based on the parameters and Boolean values. Consider factors like service provided, benefits derived. Develop algorithm, evaluate Boolean values according to the defined criteria. Calculate scores or weights for each parameter. Utilize scores or weights if performance obligations are distinct. If scores exceed threshold, separate performance obligation. Now test your knowledge questions. Question 1. T Limited running buses has 3 operating segments. Segment 1 local route, segment 2 intercity route, segment 3 contract hiring. Segment 1 contracts with authority through competitive tender process. Ticket price controlled by local authority. Charge is on per kilometer basis. Segment 2 one in one city to another. Prices are set by T Limited. Segment 3 leases buses under long term agreement. Segment 1 decline in profitability. Segment 2 performing well. Management like to aggregate segment 1 and 2 for reporting under operating segment. Required steps to automate the process, whether it is appropriate to aggregate segment 1 and 2 as per Ind AS 108. Solution. Steps to be followed. Extract financial data of segments 1 and 2. Ensure data includes segment specific information like revenue, expense, assets and liabilities, etc. Criteria for aggregating segments. Consider factors like economic characteristic, customer base, pricing policies. Utilize automated analysis tools. Apply predefined algorithms. Conduct comparative analysis. Based on the analysis, evaluate whether to aggregate segments 1 and 2. Document rationale behind the decision. Use business intelligence software data visualization platform. Now question 2. New Way Limited enters into an agreement with a customer in new region for Rs 12,50,000. Define criteria for identified contract with customer. Establish rules to link specified contracts and assign identifiers to each contract. Required. Advise steps to automate. Answer to second question. Contract management system may be implemented. Define capture key contract details. Integrate contract management system with sales or project management systems. Contract related data associated with specific contract are linked. Assign specific tags based on defined criteria to enable efficient searching, filtering, grouping of contracts. Use custom queries or predefined templates. Visibility into implementation of Ind AS 115. In addition, the following may be adopted. Consider utilizing OCR technology. Convert printed or handwritten text into machine readable format. Apply machine learning, identify specific contract terms, and classify based on predefined criteria. Utilize workflow automation tools to identify new contracts based on specific criteria and assign unique identifiers. Reduce manual efforts, ensure consistency in contract identification. End of TYK and illustrations. Thank you.